The reason that I invested in China is I could get so much better companies at so much lower prices, and I was willing to take a little political risk to get into the better companies at the lower prices. Other people might reach the opposite conclusion, and everybody is more worried about China now than they were 2 or 3 years ago.
Will Alibaba stock be delisted? Well, in this video, you guys are going to find out. I'm Ben, and welcome to Motivation to Invest. So in this video, I'm going to talk you through a recent post I've wrote for Yahoo Finance on Alibaba stock and if it will be delisted. And spoiler alert, guys, Alibaba is actually on the edge of being delisted. So we're going to dive into the full details here and what should you do as an investor. So without wasting any time, let's dive in. Hopping into this post here, of course, we all know Alibaba is often called the Amazon of China, even though they're obviously different in many ways. But they're a large e-commerce company. They also have Alipay, which is really ubiquitous in the whole of China. Now, diving into the share price for a bit of price action to start off with, we can see if you invested in Alibaba stock in 2014, you would have generated some tremendous returns up until 2018, doubling your money. But the stock has been volatile over a long period of time. So if we go back to 2020, the stock dropped to $181 per share. A lot of people, including myself, saw this as a great buying opportunity, bought in. The stock basically jumped by around 70%. But since then, Jack Ma, the founder of Alibaba, was fined. He actually went missing for a period. The company come under intense scrutiny from the CCP, the Chinese Communist Party, and the stock has slid down by around 70%. Now, value investor Charlie Munger, who's often known as Buffett's right-hand man, saw this as a buying opportunity, and he was actually buying shares in the stock. I've actually got his exact buy point here. So if we can dive in here, Munger was buying Alibaba stock at $245 per share. The stock actually dropped by 62%. And then he added to his position, which is characteristic of Munger, a true value investor. He's understood the value of the company. He understands market volatility and he adds to his position. He added to his position again as the stock was falling and again by the end of 2021. However, strangely enough, by the first quarter of 2022, Munger reduced his position by 50%. This was actually a shock to many people because Munger's a long-term investor like Buffett. His favorite holding period is forever. So for him to reduce his position in this stock was actually a shock to many people. Now, there are much speculation about the reason he did this. I personally believe Munger did this for tax loss harvesting reasons, which basically means if you sell a stock when it's down, you can offset that against your tax. Now, this is not tax advice in this video, guys, so please seek out independent advice if you do want tips on that. But really, this could also be for another reason, and that is the volatility of China, the craziness, and really the lack of control that the average retail investor has. Because for those that don't know, if you're investing into a Chinese stock, you're actually investing into what's called an ADR, an American Depository Receipt. So you're basically investing into a shell company based in the Cayman Islands with the Alibaba name, and they have a contract with the Alibaba company in mainland China. Now, will Alibaba be delisted? Now, this is really the main issue right now. Let's take you back. In 2020, the US Securities and Exchanges Commission announced that all Chinese companies with a listing on US exchanges must comply with US accounting standards for their financial reporting. And I actually did many videos on this and I explained that this was a risk. We were all aware of this. But the assumption was that the Chinese companies would actually just play ball and really release their details and comply with the accounting standards of the US. Now, it seems that things haven't gone so smoothly. So according to Bloomberg, which is where I sourced some of this information from, the talks between the US and China have recently hit an impasse, and Beijing has refused to permit US officials to review the work of Chinese auditors. So this is a big deal. Chinese authorities state security risks from sensitive data as the main issue. So basically, the Chinese doesn't want the US going through all their financial statements and potentially revealing what they consider to be data which would be a risk to them from a national security perspective. Approximately 250 Chinese companies now face a real possibility of delisting from US exchanges, with Alibaba actually being one of the largest, if not the largest, on this hit list, I will call it. So what's going to happen from here, guys? Talks are at a standstill. Alibaba does not seem to be playing ball. Well, I actually uncovered some interesting information. So on July the 18th, 2022, Alibaba announced that it's seeking a primary listing on the Hong Kong Stock Exchange, as the company, I believe, aims to hedge its position for a potential kicking off from US exchanges. Now, at the moment, Alibaba has a secondary listing in Hong Kong, but their primary listing is in the US. So basically, their plan is to reverse this and actually be listed on the Hong Kong Exchange. Okay, so what does this mean for investors such as yourself, maybe, if you have invested into Alibaba stock? Well, firstly, I would say it's best to stay calm. You're most likely experiencing a lot of psychological discomfort from all this volatility and this basically roller coaster which we experience as investors when investing into Chinese stocks. So that's the first tip. Secondly, let's look beyond the headlines and look at the real facts of the situation, because it's actually not all bad. So firstly, let's get some perspective. It's not just the individual, it's not just you, it's not just me or an average person on the street which has investments into Alibaba stock. It's actually really popular among US institutional investors. So approximately $200 billion is invested into ADRs of Chinese companies, these American depository receipts. Now, as a case study, we can look at Chinese ride-sharing app Didi, which was called the Uber of China. Now, Didi was actually delisted from US exchanges, which I covered on this channel, but it still trades over the counter, so you can still invest into the stock. And as I've mentioned before on this channel, even if a Chinese company gets delisted from US exchanges, of course it isn't good, but the real company is still there. The real company is still active and working. They're still generating revenues and profits, so we do need to keep perspective. Now, in terms of Didi, they announced that shareholders in the company, US shareholders or those in Europe, will be able to convert their shares which they had in the US to freely tradable shares on another international exchange, which I personally assume is going to be the Hong Kong Stock Exchange. Thus, reasoning on from that, I would assume Alibaba will be the same. Now, the deadline of when Alibaba will be kicked off the US exchanges will be in 2024. So the company doesn't have very long left. And also, once this hits mainstream news and it's been fully confirmed that the company will most likely delist from US exchanges, I can imagine the stock taking an even bigger dive. So I did mention there is some good news for investors. So when Alibaba actually makes their primary listing in Hong Kong, that will actually give them a major opportunity to reach out to a lot of these investors in mainland China. So basically, Alibaba will be eligible to be included in what's called Stock Connect. And this is a system which links all Chinese exchanges, Hong Kong, Shanghai, Shenzhen together, and thus gives mainland Chinese retail institutional investors access to invest. Now, the reason this could be a real game changer is Goldman Sachs actually forecasted that this could provide an extra $30 billion of inflows into Chinese stocks listed in Hong Kong, which would mean a significant boost to the stock price, and it may even be a catalyst which sparks another bull run in the stock price. Okay, so would I recommend investing into Alibaba stock right now, given all the information that we know? Well, personally, if I did have a lot of faith in the company, I would just invest directly into the Hong Kong shares. So the ticket is 9988. You can invest directly into the Hong Kong shares and save all this issue, cut out all this Cayman Island company issue, and just invest directly into Alibaba in Hong Kong. That was if I really wanted to invest into this company. But personally, I think it's more about your own psychology, and you've got to think about the volatility. The stock's so volatile. Yes, you can get 20%, 30% returns, but you've got to think about your own psychology and thus judge your risk and investments proportionally. Now, if you're already an investor into Alibaba stock, should you sell? Well, that's entirely up to you. If you've looked at your portfolio and you see there's an opportunity, let's say your Alibaba position is down, and you see an opportunity to do some tax loss harvesting by selling it and offsetting your gains from other stocks, then that could also be a potential opportunity, and is exactly what Charlie Munger and Mohnish Pabrai, who's also a value investor, has done. Now, there will be some of you who will think all this will blow over, the stock won't get delisted, and they'll just hold on for the long term. And that is a strategy. So let's say even the stock does get delisted. We know once it's delisted, once they're listed on Hong Kong, give them a few years, and most likely a lot of money will flow in from the Chinese mainland and mainly from other investors from all over the world. And I think the stock will actually have a major bull run in China. The only issue is this could take maybe 2 to 3 years. So you've got to think about the opportunity cost of leaving your capital in Alibaba stock. But that's my 2 cents on Alibaba stock. I hope you found this video valuable. At the end of the day, any financial decision or any investing decision should be your own, independent and based upon your own personal psychology, I believe, and also investing goals. With that being said, I hope you guys found value in this video. If you did, feel free to give it a big thumbs up. It helps out tremendously with the channel. If you haven't joined the investing family yet, feel free by hitting that subscribe button, turning that notification bell on. With that being said, thank you guys so much for watching. I hope you all have an incredible day. I wish you luck in life, in the markets, and I'll see you guys in the next video. Keep growing.